2017 got off to a great start in the first quarter, with stocks growing over most of the globe. The Dow Jones Industrial Average surpassed 20,000 for the first time. Large U.S. stocks continued to outperform small caps, with the tech-heavy Nasdaq outpacing solid gains from the Dow and the S&P 500. Overseas stocks also finished the quarter in the green, with significant growth especially among emerging markets. Gains of over 5% were common among a number of European nations. In fact, it was difficult to find many leading stock indices that finished in the red for the first quarter, although Russian and Japanese stocks logged some minor losses. U.S. bonds managed to eke out minor gains for the first quarter, despite an increase in interest rates in March. Commodity performance was mixed. Most metal prices enjoyed solid gains, along with cotton, rice, and wheat. Most other soft commodities finished the quarter in the red. Things seem to be looking up for the American economy in the first part of 2017. The headline unemployment rate dropped to 4.7% by the end of February, and the Consumer Confidence Index hit a significant high a month later. Hiring was strong in both January and February, with 238,000 net new jobs added to payrolls in the first month, and 235,000 added in the second. New home sales rose over 5% in both January and February. Existing home sales were up over 5% for the year ending February, with new home sales up more than double that over the same period. The median existing home price rose 7.7% from a year ago. Inflation also picked up somewhat both in Europe as well as the US, with the Consumer Price Index rising 2.7% for the year ending February. All this data encouraged the Federal Reserve to follow up on its December interest rate hike with another in March. That rate increase was largely expected by the markets, and the Fed is projecting 2 additional rate increases in 2017. So while a bullish outlook prevails on Wall Street, doubts still linger. With the U.S. leaving the Trans-Pacific Partnership and Britain beginning the process of exiting the European Union, geopolitical risks remain. Uncertainty also remains on the domestic policy front. With a new presidential administration, the fate of the Affordable Care Act and the potential for tax reform are now in question. Regardless, the U.S. stock market began the year on a strong foot, extending a bull market that has surprised many with its longevity. As always, it's a pleasure for us to serve you. Thank you for listening. Should you have any questions, please contact your LifePlan relationship manager. All of us at LifePlan hope you enjoy a wonderful spring. Have a great day.